So, with the economy experiencing something it's never experienced before, all the lockdowns, all the shutdowns have caused a lot of investors to retract into cash. And one person says a 5 trillion pile of cash is waiting to enter the Bitcoin market, asserts a top investor. We also have $300 Ethereum. Ether looks to be next major crypto to follow Cardano. So, is Ethereum going to follow Cardano, or is Cardano going to overtake Ethereum? Then we also have Canada's central bank is serious about designing a CBDC, a job posting reveals. And we also have the number of Bitcoin quote unquote whales has risen by 2% since the halving. Remember, guys, the halving wasn't that long ago, and there was a lot of fear during the halving the price was going to crash. But as we can see, the smart and the big money has been accumulating. So let's start off here first. Bitcoin's price rally has stalled since the cryptocurrency underwent its third halving on May 11, but investor confidence in the cryptocurrency's long-term prospects remains strong, the data shows. So far, though, the leading cryptocurrency by market value has failed to pick up a strong bid and continues to trade below 10K, a level seen 2 days ahead of the halving. Even so, large investors, often called whales, continue to accumulate coins is seen below. So right here we can see the number of entities with a balance of 1,000 Bitcoin or more. So this is the number of entities holding that balance, and then the gray line is the price. So as we can see, price right now is basically sideways, but this has been up and has been mainly accumulating, right? A little bit of retractment, maybe a little bit of profit taking, it seems, but overall, since the halving, it's been up, and it's actually way up. So there was about 1,780 addresses the start of the halving, and now there's about 1,840. So it's quite a bit more for people holding 1,000 Bitcoin. Remember, guys, 1,000 Bitcoin, unless you have a lot of money, it's extremely hard to accumulate. So as of Tuesday, the number of Bitcoin whales is represented by the tally of unique entities holding at least 1,000 coins was 1,840. That's up nearly 2% from the level of 1,811 observed on May 1st. According to data from blockchain analytics firm Glassnode, the metric clocked a recent high of 1,844 on Monday, a level last seen in November of 2017. And remember, guys, we also have people who own 1 Bitcoin or who own 0.1 Bitcoin is also on the rise. So not only are whales accumulating, but you do have retail accumulating as well. The steady accumulation since the halving suggests investor confidence in the long-term bullish narrative surrounding Bitcoin. Most analysts expect the cryptocurrency to rise sharply over the next 12 months on the back of the unprecedented fiscal and monetary stimulus delivered by authorities across the globe in the past 3 months. Bloomberg analysts said they expect Bitcoin to challenge the record high of 20,000 by the end of 2020 on increased institutional participation. If you guys want to see a video, I believe in yesterday's video that I made right here, if you go and check that out, we cover institutions getting in, mainly Grayscale. It should be in that video right there. If you want to see the amount of money that is actually coming in from institutions, there's so much more Bitcoin being bought per month than is being put on the market by miners. Go check out that video. And hey, why not, while we're here, if you guys like daily cryptocurrency news, if you like the video so far, consider subscribing to the Digital Investor channel. We're a new channel. We're under a month old, but we're growing insanely quick, 1,800 subscribers. So thank you guys so much for that. Thank you so much for the support. If you guys could also just take 1 split second to like the video, it would help me a ton in reaching more people, and we can build this community even bigger. And just again, guys, thank you for all the support. With that said, let's get into this. A 5 trillion pile of cash is waiting to enter the Bitcoin market. So nothing behaved as safe haven during the infamous global market rout of March 2020 except cash. A brutal sell-off caught investors in the stock, Bitcoin, gold, and bond markets by surprise. What triggered the first round of declines was the growing number of virus cases in the US that led the Donald Trump government to announce a nationwide lockdown. Investors panicked and sold off their profitable risk-on holdings to seek cash. Some of them joined the negative rally to cover their margin calls to avoid facing losses from their over-leveraged positions. As a result, every asset, including Bitcoin, fell, leaving cash as the only king. 3 months after the crash, global research firm Refinitiv Lipper found that investors now hold about 4.6 trillion in money market funds, its highest on record. Investors are struggling to find low-risk investments in the current volatile markets. And if we look at this graph, guys, so investors are sitting on the biggest pile of cash ever, and basically we can see that right now, investors sitting on cash is at an all-time high per this graph. Dan Tapiro, the veteran macro investor, on Thursday wrote that investors might start offloading their fiat positions to enter riskier markets, adding that holding cash is returning nothing but zero yields, right, guys? So up here, remember, they're saying cash is king, right? That's what we just read up here, that leaving cash is the only king. But cash will not be king forever, because as the money keeps printing, that cash is going to lose buying power, which is going to basically force these investors to invest into something. Otherwise, they're just going to lose money. It's what inflation is. You're losing money. Mr. Tapiro explained that investors who were fearful of the stock market's erratic moves earlier are now looking at it recovering all its yearly losses. He added that such great negativity or fear are not usually present at the equity market tops. The analogy also applies to Bitcoin, whose post-March recovery topped by over 150% in June. Mr. Tapiro noted that the cryptocurrency now has a huge opportunity to attract a portion of that $5 trillion cash pile should the risk-on sentiment return. I think it will, guys. I think it's just a matter of time. Dash to cash is most surprising because it all yields near zero, said Mr. Tapiro. Huge opportunity cost versus equity, gold, and Bitcoin. Observers note that Robinhood, a zero-fee trading platform, is at the center stage of both the stock market and Bitcoin's price rallies in Q2 of 2020. They say, we have heard anecdotally about younger individuals with less market experience viewing the March plunge as a unique time to start portfolios and often crowding into the tech arena, purchasing the stocks whose services or products they know and use, said Tobias Levkovich, Citi's chief U.S. equity strategist. That is pushing mainstream investors into a safety zone of cash. Ideally, retail traders need to exit their positions to neutralize the market sentiment and couple it with the economic reality of poor corporate returns and rising joblessness. Nevertheless, the scenario improves Bitcoin's long-term outlook. Like Mr. Tapiro highlighted, investors cannot forever sit at the sidelines of a bullish market. This is true. They would need to move away from zero-yielding cash markets and increase their positions in the stock and Bitcoin market. Yeah, guys, if you think investors who are sitting on $5 trillion are just going to watch their dollar lose buying power when they can instead get into an asset and have their money actually inflate, I think that's the route they're going to go. Today, Bitcoin is sitting at $9,400, Ethereum's at $230, XRP is at 19 cents, Litecoin's at 43. We have an 8-cent Cardano, and speaking of Cardano, let's hop into that Cardano article. Our fear and greed index for today is 40. I'm not even going to look at the chart, guys. It's the same thing. We're waiting for a break up or we're waiting for a breakdown, and it's really that simple. Like I've said before, have a plan on both sides. That's really all you can do. Be prepared for whatever is going to happen. Me personally, if we come down to 5, 6, 7,000, I have buys going in. I'm looking to accumulate. If we go up, awesome. I've been waiting long enough. And I'm sure you guys feel the same way as well. So Ether looks to be next major crypto to follow Cardano. Ether's price is set for a major breakout, and hitting as high as 330 should not be ruled out. Recently, several altcoins have been showing strength. These are Theta, ZIL, and Elrond. And larger market cap coins like Cardano are also performing pretty well. As smaller cap altcoins begin to lift off, some investors might be wondering exactly what is needed for a significant surge in the large caps. Does it need to come from Bitcoin, or does it need to come from Ethereum? Where does the signal need to come from? So right now, Ethereum's holding a crucial $220 support level. It rallied from $195 to $250 in the last month, but it also corrected alongside Bitcoin in the previous days. As Bitcoin's price pulled back this week, Ether endured a test in the green area between 271 to 222 is the zone that is needed to hold as support. As shown on the chart above, the bounce succeeded and confirmed that the 217 to 222 level is a support level, whereas it was resistance throughout May. Good news, guys. The chart is also showing an apparent resistance at the 250 level where a range appears. This range has support between 217 to 222 and resistance at 250. As the range is determined, the conclusion can be drawn that a breakout leads to a trend. Ethereum has been in an uptrend since the crash on March 12, after which it's more likely to see further upside above 250. The next primary resistance is at 290, 330 to 340. If the price drops below 217, a potential support test of the 100-day and 200-day moving averages can be expected at 168 to 176. The bigger picture is showing a clear accumulation period for ETH/USD, and since July of 2018, the price of Ether has been hovering between 100 and 300, a range of 2 years ready to break out. The longer such a range sustains, the heavier the breakout likely becomes. Additionally, such a long accumulation period warrants an excellent risk/reward opportunity as well. What's crucial in this chart, the 100 and 200-day MAs are beneath the current market price, which warrants support and warrants further upward momentum. And as remember, guys, I think it was yesterday's video as well, people holding 0.1 Ethereum are going up. Grayscale is buying Ethereum like mad. They are hoarding it. So, you couple that with this. I always try to couple the fundamentals with what I see on the charts. And when I couple those together, you can, when you look long term, right, it's hard to predict in the short term. It's hard to predict at all. But when you look long term and you see this, right, you see this accumulation, this bear market, you see the accumulation, you pair it with the fundamentals, we're making higher lows. When you look at all of that, to me, it's pretty obvious to see where all of this is going. The total market cap of cryptos is showing a clear breakthrough in the 2018 support level. The 215 to 222 billion levels have been support earlier in the cycle and have again flipped to become support. So basically, guys, we're sitting on support on everything. Everything is sitting on support. We've been accumulating. We're either going to break out from these support levels, or we're going to retrace, accumulate a little bit more, and then retest it at a later date. And this basically just goes on to cover the other altcoin market cap, covers a couple other things, but that's basically it. That's basically the article. If you guys want to read the entirety of this article, it's on Cointelegraph. Go ahead and check it out. But yeah, guys, everything is looking to set up very, very nicely, from Ethereum to Cardano, and whether or not, Ethereum versus Cardano, right, which one is, going to win. I hold Ethereum and Cardano, right? And the reason why I hold both is because I think that they are both going to go up in the next bull run. They definitely are. Ethereum's being hoarded, and retail definitely loves Cardano. They have staking, which I think staking is going to play a huge role in terms of coins that really boom this upcoming bull run. So I hold both, and I almost see my Cardano as kind of like a bit of a hedge against Ethereum for just in case. So either way, I'm holding both, and I'm excited to be holding both. I'm excited to make money on both. Let's wrap this up on this last article here. Canada's central bank is serious about designing a CBDC. So after years of research, the Bank of Canada is preparing to design its own CBDC. Revealing its plans in a June 11 job posting, the central bank said it was reinventing central banking and radically rethinking the nature of Canada's cash. Quote unquote, the Bank of Canada is embarking on a program of major social significance to design a contingent system for a CBDC, which can be thought of as a banknote, but in digital form, the bank wrote. Still, the job posting said as much about the new role, CBDC project manager, as it did about the project itself, going into detail on some of the features of a digital banknote. According to the job posting, Canada's CBDC should protect user privacy, though not to the degree that cash does, remain accessible to those without bank accounts or mobile phones, work when the power is out, and rival banknotes in their security, so as to gain confidence among the cash-wielding public. If you need to hear that again, rewind the video. That is extremely bullish. Further, the bank wants its CBDC to live on an architecture, quote unquote, with a potentially multi-decade evolving lifespan. So this is long-term stuff that can grow in tandem with policy goals. The bank did not state what technology its CBDC might run on, whether it would follow a token-based or account-based model, or how it would create a digital currency that works where electricity does not. The move casts Canada as a serious contender in the race to develop CBDCs, but to be clear, the bank has not committed to issuing a CBDC just yet. Officials downplayed the need for one as recently as February, arguing there was no compelling case for a Canadian CBDC unless a private digital currency such as Libra took off. And we're about to see a ton of cryptocurrencies take off in the next bull run. So basically what I'm getting from this, with them saying that, is until the bull run happens, they're not going to go ahead and come out with the CBDC. Why? I don't know. Maybe they're accumulating themselves and they want to accumulate at lower prices without coming out seeming too bullish, but they want to have this infrastructure, right? Basically what it seems as though the Bank of Canada is doing is they are putting down the groundwork now. They are building their infrastructure now. They are planning now because they see that this is going to come. It's laughed at now, but they know it's going to come. So they can't just only laugh at it. They laugh at it and they have to plan for it. So Canada sees this coming. Canada sees what's around the corner. Let me know in the comments if you guys think Canada should kind of just be building infrastructure right now, or if they should full on launch a CBDC right now. What do you guys think? Do you guys think Canada is making the right move here? Personally, I think they are. Whether they're going to make their CBDC now or wait for a bull run doesn't really matter to me. The fact that Canada is coming out with a CBDC, they're looking to go digital, and then you have another country like India who's looking to ban cryptocurrencies. It's kind of obvious to see which country might do better, which country is going to, have possibly crypto migrants going there, right? If crypto's banned in India and you own a lot of crypto in India, you're probably going to look to migrate to a country that's going to be more open. You're not just going to, if you had millions of dollars in crypto and you're in India and India bans it, are you just going to sit there with your worthless millions, or move to a country where you can actually spend them? Because personally, I'm in the US, and if the US banned not if the US banned Canada, but if the US banned cryptocurrencies, I'm just going to be out. It's that simple. I'm just going to move to a country that accepts crypto. And really, that's that. With that said, guys, I hope you enjoyed the video. If you did, consider subscribing to the digital investor community. Thank you guys so much for the support. If you could like the video once again, that would be amazing. And I'll see you all tomorrow on the next video.